thank you for your contributions. And before we pass towards the end and your final thoughts and consideration around this topic, we've walked through the importance of alternative investments to diversify portfolio, but we all agree, or most of us agree, that it's a patient capital for the long term. We've also analyzed the power of private markets in driving ESG commitments. We've talked about that the lack of data standardization is not an excuse not to invest in ESG, and a little bit now I'd like to hear from you what's the future ahead.
Shall I start?
Aveesh, yes, of course.
So I guess kind of in my kind of closing marks, the ESG is not going away. It's 5 years ago I was talking to ESG teams about ESG, and I was talking to financial teams about finance. Now most of my conversations are with financial portfolio managers, the people who are doing portfolio construction. So it's going where we need it to go, which is ESG is going to disappear because it's just going to be completely normal parts of financial analysis. That's the direction things are going in. So there's all of that angle. Remember, and asset owners are now expecting this data. They'll only include you if you're including ESG analysis in your fund. If you're facing retail, this is another way asset managers are differentiating their products as well. Either way, the big challenge is, where is this data? Which data do I need? How am I doing? So all of these things, that's where the market is currently being challenged. But I would just say, this is exactly what we are focusing on at Bloomberg. We're investing very heavily in this space, particularly on the data, the tools, and most importantly, the functionality to integrate ESG into your investment analysis. So we'll get there together.
I like that, Aveesh. Thank you. Chris?
So I guess in terms of forecasting, I agree, maybe 5 years' time we're not going to have this forum with that topic because ESG will be more mainstream, and we won't even argue about the need to incorporate ESG portfolios. It's going to be just more of a regulatory requirement. We might see more consolidation of asset managers because anything related to compliance and ESG, cross-linked compliance, is expensive. And I don't think smaller firms could go and launch new products if they cannot afford doing all the work, getting the data from Bloomberg, which probably might reduce the prices or for others to be able to cover this insight. So I think there will be a lot more service providers around ESG, startup firms. I think that there will be some consolidation. Now, I also think that individuals will get a little bit more conscious about the decisions they make when either data is not available or it's just not easy to comprehend. You to delegate it to others, and especially when it comes to VC invested and early stage investing and impact. I wish more than I envisage that we'll all get a little bit more educated and be able to make more thoughtful decisions. And it's okay if the data is not there, we can still engage with the management of smaller firms and be part of the journey.
Thank you. That's the role of CFA and CAIA as well. So, Christos.
I will have to agree with both my co-speakers. First of all, as Aveesh said, it's a one-way street. We're not going to go back on this. During the early 2010s, you would hear the term ESG and you would not be really sure what does it stand for, the acronym. Now you know very well. So yes, it's going to continue, it's not going to go away. The data, one aspect is very important, the data, whether we will, we are away from that yet, but whether we will reach a stage where non-financial reporting will be done and presented in a way that it will be easily and digestible, and you will not have to spend hours to understand what the report says. We are quite some way away from that, but I think progress is being made. We get there. I mentioned before that for me it's the time, I believe that it's the time that authorities, and especially international authorities, international organizations, should assert a more leading role. And the last point I want to make is that it will have a multiplying effect on ESG investing if there are changes in the banking sector. What do I mean by that? ESG is about what? About sustainable development. No economy can grow and develop in the long term in a sustainable way without a credible and supporting banking system. The banking system globally has become less and less engaged and involved in banking activities and more involved in bureaucracy. So, if the banking system reasserts its position in the economic system and in global economic activities, it will really help and promote and speed up ESG investing. And also, because banks have suffered a lot from heavy and unproductive regulation across the globe, not only in Greece, one of the risks of ESG, of stopping or slowing up ESG investing, one of the risks is to end up with regulation that it is very heavy, very unproductive, non-realistic, and can do, instead of doing good, to do damage.